Good afternoon, everyone. My name is Taha and I'm an analyst with Elliott Wave Forecast. And in today's video, we will be looking at GameStop and we'll talk about the structure and where can this stock go to in the next few months to possibly few years. Before we jump to the chart, let's take a look at an Elliott Wave structure that is called the nest. And a nest is basically a series of ones and twos, and once the wave 3 starts, the market opens up in a series of 4s and 5s. So in this example right here, we have a triple nest, a 1 2 1 2 1 2, and then we get the 3 4 3 4 3 4 and 5. Right now we are expecting that GameStop might be trading within a triple nest, and looking at the chart, basically the nest starts from January the 6th. Now our members, they're very well, they've been told how significant these lows are, right? If you look at January the 6th, that's where Tesla bottomed, that's where a lot of tech stocks bottomed. You look at March the 16th, that is the secondary low in many instruments, the Dow and other indices. So it's one market after all, so it's not a surprise that GME has also made some major lows on these dates. So from January the 6th, you have a reaction, a pullback. From March the 16th, you have a reaction, a pullback. And from May the 2nd, you have another reaction and a pullback, right? We expect a series of nests to be taking place, and the way to find out about nests is the first, or basically the second nest should erase divergence, right? And the last nest in the shorter cycles, which in this case is a 4-hour cycle, it comes with divergence. So it is unable to erase divergence, right? This is a very bullish sequence, and we basically expect that the market should open up soon. A break above this peak will basically signal that the wave 3 of 3 is unfolding. Now, what would invalidate this structure? A break below this low. So 1806 here needs to stay intact. If we break it, then this is not a nest, and this, in a bearish count, this would be a WXY, right? Or basically a corrective bounce. Now, one thing about corrective bounces is they should reach equal X areas, which in this case it missed it by a few points. Another thing about corrective bounces is the last leg of the corrective bounce should erase divergence, but in this case it did not. So it's very likely that it is nesting, and the way to trade this is basically to buy pullbacks. So this was a pullback to buy with a stop at 1806. The next pullback to buy is basically against red 2, right? So it should stay above 1989. All right, let's see. We have to wait for more data until this peak gives up. This remains sideways, right? So that's pretty much it. Now, if you like what you're seeing, once again, we are a forecasting company, Elliott Wave Forecast. We basically cover all major asset groups around the clock. We're 24/7, 24/6 kind of service. We have Forex, commodities, cryptocurrencies. We also cover world indices and US stocks and ETFs. And from time to time, we will write blogs and articles about, instruments that we don't cover. It's a free, section. We have video blogs, stock market, cryptos. So this one here will be in the video blog, right? So make sure you check us out, read the blogs, and if you like this service, we do have a 14-day trial that you can check us out. All right, and looking forward to seeing you soon. Bye for now.